Welcome to Beyond the Numbers, coming to you live on our Joy News channel. My name is Winston Taki, and I'm doing this with
Caleb Zablin.
Indeed, there has been several conversations before the House of Parliament concerning the lithium deal being withdrawn and some other bills that are under consideration on the House of Parliament. But today, our focus is going to be on the Bank of Ghana. In the year 2025, from January to now, there has been consistent intervention on the FX market and to the tune of $10 billion, and that is an assessment we will be having shortly here on Beyond the Numbers. And that has been an interesting dynamic, getting the World Bank to release a statement warning, cautioning the central bank to at least maintain or sustain its intervention consistently. And this has been the analysis so far in the year 2025. I'm here with Caleb. And Caleb, 10 billion Ghana cedis. Some have said that the consistent intervention, how long was the central bank being able to sustain it? And this number tells us a very interesting year compared to other years.
So when the year started, the IMF said the BoG brought in about $1.4 billion in just the first 3 months. And that was massive. And if you can go to the next slide, you can see that, the next slide, you can see that the whole of 2023, the BoG intervened with 1.1 billion. And the first quarter was 1.4 billion. So there were conversations that this is too much. But now we have indications from our sources at the BoG that for the entire year, they've intervened with $10 billion. Now the question is this sustainable? Because if you are intervening with $10 billion, it should either mean that you have a steady supply of dollars coming in and enough dollars in your buffers so that once you run out of dollars, the markets will not panic, and then that's where we see the rapid depreciation of the currency. And if you can go back to the slide about the city, you can see that in the first 3 months, when the BoG came with $1.4 billion, we saw stability, almost a very straight line. That was the first time in a very long time that we've seen the city.
So when they started the intervention in the first quarter of 2025, that was when we started seeing the effect in the stability. First 3 months.
Exactly. And then after the first 3 months, we don't know how much the BoG intervened with, but then we saw this nosedive, very massive. The city strengthened from 15 cities to about 10 cities.
That was where we saw the speed, weekly and daily speed depreciation.
And it dropped to about 10 cities. We wanted to go to single digits to about 9 cities, but that didn't happen. And it stayed at 10 cities for a very long time again, from July to early September, late August. Then we saw the depreciation again. And this time we had indication that the BoG was working on a policy document, which is why they had stopped intervening in the market that regular. And the president confirmed this when he met with the press that the BoG has stopped. Then we heard the BoG come now and saying that next month we are coming to pump $1.15 billion in the market. And we're surprised because the BoG doesn't do this. And then that's where we had confirmation that the BoG has indeed rolled out its policy on how it's going to intervene in the market. And then for the past 2 months, the BoG has intervened with about 2 billion roughly, 1 billion every month. And we had 1.4 billion earlier this year. So the rest of that happened when the cedi appreciated rapidly. That's about $6 billion, $7 billion from May to about September, which is why we saw this nosedive. It means that once the BoG came with so much dollars, the cedi strengthened. And since then, the BoG is trying to sustain that.
When the IMF warned about the slowdown in intervention, we saw the central bank deciding before the review meetings considered a collaboration with the IMF, where they came out with a document to support the FX intervention framework. And that framework has been the life plan that they've been using to intervene to the market, where they've introduced auction payrolls for how the amount of money that should be expected weekly. And this has given the market some form of transparency in how the central bank decides to pump into the market.
Well, that's what IMF wants. They just want transparency, which is why the BoG now publishes regular announcements of how much they're going to pump to the market. The IMF wants, and I think the IMF agrees with the BoG's approach because according to the BoG, they worked on this policy document with the IMF. So it's part of the structural benchmark that we've now met in the IMF program, the ongoing IMF program.
The fear that most analysts and economists had previously was that is the central bank going to bend its reserves in order to fulfill a better currency stability. But this tells us that due to the performance of the gold reserves, gold on the international market, we had enough due to the domestic gold program, and that gave us some profitability going forward, where the central bank is able to launch these particular interventions consistently. And many were not quite optimistic whether in the midst of an intervention, the central bank will have the capacity to fulfill debt repayment obligations. In the first quarter of 2025-26, we are likely to have a lot of debt obligations to fulfill. for not just our domestic bondholders, but also external bondholders. And these are the conversations that, if you read several reports that were cautioning Ghana from the IMF, the World Bank, telling us that although these are challenges, including the energy sector debt, we have the tendency to not reflect or go back to point where our fiscal indiscipline will be a thing of the present, but rather a thing of the past. And this confidence being exhibited by the central bank in their recent release tells us that there's a plan and structure to how they are managing the resources.
Yeah, and if you can go to the next few slides, you can see that, the next slide, you can see that this is what the IMF wanted, that your intervention should be limited, it should be transparent, and it should not be to stick your currency to a particular number, but then it should just smoothen the volatility.
Yeah.
So for instance, in the Christmas season, you know sometimes there's demand on the currency. This is when the BoG should step in to smoothen that volatility and not strengthen it rapidly. So let's say 10 cedis again. So that's what the IMF wanted. And now the BoG has done that together with the IMF. And the only reason the BoG can do this is because of the price of gold and also cocoa to an extent, but mainly gold. Because gold last year was trading less than $2,000 per ounce, about $1,800. This year, we've crossed the $4,000 mark. Now it's about $3,900 per ounce. This is why the BoG has enough Forex to come into the market to still build their reserves. That's about almost $11 billion, almost $12 billion of reserves now. Then the IMF, then the BoG can also, in submitting the market, support the market players while still building its reserves, along with building its gold reserves. So aside the Forex, the liquid cash the BoG is building, they're also building gold reserves. So this is why the BoG is confident enough to have pumped about $10 billion in the market.
Talking about transparency, just to cut away speculation, we saw there are several performances by the black markets, and just yesterday we got a report from the police service in collaboration with the central bank arresting over 41 abochis in key structured areas. Some will say, considering how laborious or bureaucratic it is to have access to dollar from the commercial banks, there is a need to have these abochis because they are kind of express in how they transact the operations. The instant abochi, how much are you giving?
No Ghana card,
commission, no Ghana card, no laborious processes. However, the central bank is also quite cautious because in as much as they are pumping this amount of interventions into the market, they want to seal the loopholes in the system to avoid drains, to avoid people taking more than they're supposed out of the country, so that at least they can maintain or control the market, to know when to wipe out excess liquidity and when to inject more liquidity into the system. And this, I believe, this abochi intervention is a very critical one. This is the first time we've seen a large scale in key operation from Circle, the airport area, from Tudu area. And so surprisingly, the amount that they had, I think about 1.2 billion Ghana cedis that has been collected and several other currencies so far from that operation that happened just yesterday. We're hoping that this will not just be a flash, but there will be subsequent thing that will ensure there is consistent control of how the dollar moves in the economy, basically.
Yeah, and the interesting thing is that the abochis, we all know where they are.
Yes.
So the BoG knows where they are.
They will even look for you wherever you are and tell you they have the dollar.
Exactly. So the issue sometimes is that because the BoG might not have enough Forex to supply, sometimes you might turn a blind eye to be able to meet market demands. But once the BoG has full control of the supply of dollars, they can now plug out all the loopholes. Because if you need the dollars, if it's for legitimate processes, goes to the commercial banks, you get the dollars. Once you have a paperwork and all of that. And the other part of the coin is that you do not need dollars to live in Ghana. We spend cedis, which is why the BoG governor has now been preaching CD and all of that, because we spend cedis. So having easier access to dollars just undermines the effort of the central bank and the stability of a currency. So this makes sense. Once the BoG can consistently supply the market players who actually need the dollars, then there's no need for you to get dollars by the roadside or anything, because we don't spend dollars in the country.
Amazing.
And then once you also talk about that, we also have to get into the gold board conversation. And if you go to the next slide, we'll see how much.
Before we get to the gold board market, let's also address a very open information, but most people fail to address. That is, there are instances where it is believed that some banks, commercial banks, rather supply the dollars to these abochis to sell on behalf and make margins for them. And this is something that has been happening for quite some time now, and we hope the central bank is able to ensure the ethics of the financial system are applied in key structures and monitor such operations investigatively. And finally, what are these before we wrap up for today?
Yeah, so after having the meeting with the IMF to roll out the policy, this is what the BoG has now. This is the BoG official market intervention policy.
Yeah.
So it's going to be market determined. So they determine how much the market players need in a particular month, and that's what they supply. And only the market players will be able to absorb that. If they don't absorb it, the BoG adds the rest to its reserves. And competitive auctions, also motives for each FX operation. The BoG has to tell us why they're coming out with $1.15 billion in October, $1 billion in November. They'll tell you why. Transparency. And finally, they publish the monthly data. I've not seen this yet, but I think the BoG is still working on that, or maybe it's not a public document yet. So these are the key policy initiatives that they brought under their Forex intervention policy, which they work together with the IMF.
Amazingly, in the last few days, we've seen the cedi depreciate against the dollar.
Yeah.
Some have said that these are due to seasonal demand pressures that are happening because we are in the Christmas season, and certainly it is expected most trade opportunities and in and out of foreign trades all happen within this season, and certainly expect. We're hoping that sustained market intervention, now that there's transparency, investors, businessmen, those who have subscribed to a certain form of investment can possibly project how the first quarter of 2026 will look like. And certainly this aspect of transparency and data is relevant to make informed investment decision. This has been the Beyond the Numbers coming to you live here on the Joy News channel. My name is Winston Taki, and I did this with
Hello, Zublem. See you Friday, 5:30.
Absolutely. Have a good business day.